All right, everybody. Apple and Amazon might have just saved the entire stock market. Not really, but they did pretty well. So let's get into them real quick. Before I get into their actual earnings, let's go to their stocks. I didn't expect them to do this well, to be honest. I really didn't. Look at this. Apple's up 162, just an absolute baller, up about 3% of the day. It was in the 152 era, ran all the way up to 163. Look, Apple was at 129 back in June 16th. June 16th so far has theoretically been the bottom, given what's been happening for stocks that have been going up. Now, is this fake? Is this like a dead cat bounce? I don't know. We're going to have to see. But earnings have supported what has been going on in the market, at least from big tech. It has not been a disappointment. Really at all. Amazon, look at this, up 136, absolute baller. Amazon was at 115, it was at 106 just 18 days ago, less than that, about 14 days ago. So ran all the way up to 136, doing phenomenally well as well. So let's find out why this stuff is actually happening. Let's go here. So Applebee's on revenue and profit expects growth to accelerate despite pockets of softness, meaning they are expecting the growth to be fine, even though things have come down a little bit. So let's look at their real numbers. EPS, they beat 120 versus 116. It's down 8%, but they still beat what was estimated. 83 billion in revenue versus 82.8. Again, they beat 83 billion in revenue is pretty not bad, up 2% year over year. iPhone revenue, 40 billion bucks versus 38.3 billion. So it's still up 3%. A lot of people thought iPhone demand was slowing down. iPhone, maybe it's slowing down in the macro, but in general, people are buying some iPhones. $40 billion is kind of crazy. Services revenue, 19.6 billion versus 19.7. Missed on that, but nothing that crazy. Obviously, the services comes from like their health, their Apple Music, all that stuff that they accumulate. That ultimately, Apple Card, all of this stuff is going to turn into hopefully the next leg of Apple's growth, because when everyone has their devices, they just offer these services and it works. It's actually why Spotify is like really mad at Apple, because they offer music with all these other things for a better deal than just music for Spotify for $10 a month. So like, not the best deal for it's better for consumers, not the best for Spotify. Other products revenue, 8 billion versus 8.86 billion, a little bit down on that. Mac 7.38 versus 8.7, iPad 7.2 versus 6.9, so they beat on the iPad revenue. And gross margin 43.26%, they beat on the growth margin. They did not provide formal guidance for the quarter. Analysts expected the company to give fourth quarter guidance of 131 in earnings and nearly 90 billion in shares, in sales, which is probably, something that Apple is going to be able to get to. Now, Tim Cook says, in terms of an outlook in the aggregate, we expect revenue to accelerate in the September quarter despite seeing some pockets of softness. Pockets of softness probably is lack of demand in certain areas for different types of products or different types of things that they're trying to sell. But the idea is in the aggregate, they're going to see revenue go up, especially with probably the iPhone 14 that they announced in October and all the other different things that they announced. That's going to be able to accelerate growth. People keep buying. Like at the end of the day, people keep buying this stuff. And you would think this revenue quarter would go down because people don't want to buy because they're anticipating, the new products to come out, but people keep buying. We do see inflation in our cost structure, Cook said. We see it in things like logistics and wages and certain silicon components, and we're still hiring, but we're doing it on a deliberate basis. So inflation, this is a little bit contrary to what Tesla said, where Elon Musk literally tweeted yesterday that he sees commodity prices going down. And if that's the case, and you see commodity prices going down in Tesla's supply chain, you would assume on a macro there, it's probably going to start to go down in a lot of different places, along with the fact that inflation has peaked, gas prices are starting to go down. Next month's CPI print is going to be incredibly important to know if this actually has any legs behind it. If we go from 9.1 down to like 8.2, or do we go to like 8.9? Is there really a decrease in inflation? Next month, I think, is going to be able to let us know. The Fed raised 75 bips. The market rallied on that as well, because they're like, hey, this is awesome. Inflation is going down. The Fed is being really protective. So we're going to see what happens. We have a record level of switchers and saw double-digit growth for customers new to the iPhone, which is, and I believe in China, they found a lot of more demand in the iPhone where you would think it doesn't happen. But it's not bad at all. Cook said Apple has 860 million current paid subscriptions, which includes anyone who subscribes to an app sold on the Apple App Store, in addition to products such as Apple Music and iCloud. Apple also gets a cut of the revenue, I think 30% of apps that you buy in the App Store, which means they get, those subscriptions as well. Now, in April, Apple warned that past shortages would hit revenue by 4 billion and 8 billion. And Apple's website showed extended shipping time for many Mac models during the quarter. Cook said the ultimate hit came in under 4 billion. So they warned, hey, we might get hit from 4 to 8 billion and it might go bad. But in terms of what actually happened, it was only less than 4 billion. Overall, Apple had a phenomenal quarter. I've been saying this for the past couple of weeks, that last quarter, they threw up a Tom Brady quarter. Let's see if they can do it again. This was absolutely a Tom Brady quarter in the face of all the inflation, all the recessionary, all the macro stuff, everything going on geopolitically. Apple put up some numbers, and so did Amazon. EPS, loss of 20 cents. Revenue, 121 billion versus 119 billion. They put up 121 billion in 90 days. It's absolutely insane. AWS, 19.7 billion. They beat on 19.56 billion. And advertising, this is the big one. 8.76 billion versus 8.65 billion. YouTube, for example, put up 7.34 billion in ad revenue last quarter. Amazon, just their advertising on their website, put up 8.76 billion, which is just absolutely insane for them to be able to do that. Revenue growth of 7% in the second quarter topped estimates, bucking the trend among its big tech peers, which all reported disappointing results prior to Thursday. Amazon said it expects to post third quarter revenue between 125 and 130 billion, representing growth from 13 to 17%. So it's not growing at like 25% quarter for quarter. But for the company being as big as it is, I think almost close to $1.96 trillion company, it's not bad to be growing 70% quarter over quarter. Amazon has been contending with higher costs, and pandemic-driven expansion left the company with too many workers, too much warehouse capacity. They said Andy Jassy, the CEO, who used to be the former CEO of AWS, who is now in charge of Amazon since Bezos is the chair. Despite continued inflationary pressures in fuel, energy, and transportation costs, we're making progress on the more controllable costs we've referenced last quarter, particularly improving the productivity of our fulfillment network. And this was interesting to see him say that, because you would think in a recession where consumer sentiment is going down that people are buying less off websites like Amazon, which means there's going to be less demand, there's going to be less retail sales, and as a result of that, there's going to be less sort of streamlining in their ecosystem, because when someone buys a water bottle from Amazon, there's like 17,000 different things that need to happen for that water bottle to get to you. Well, if you're having a lack of people buying that stuff, then ultimately that's not as streamlined, it's not that effective. But even with the inflationary pressures in fuel, energy, and transportation, which is all impacting Amazon's bottom line, they were able to control costs, and they were able to get consumers what they needed, particularly because the demand of the consumers stayed strong and people continued to buy from Amazon. Now, is that going to continue to happen? I don't know. We're going to see. But if inflation starts going down and the market starts getting better, and like we started getting out of this recession talk, then maybe people start just buying even more. Amazon shaved its headcount by 99,000 people to 1.52 million at the end of the second quarter, after almost doubling in size. So they got rid of 100,000 people, which definitely saved in costs as well. On a call with reporters, CFO Brian Olvosky said Amazon will continue to hire engineers for units like Amazon Web Services and advertising, but it will be cautious about hiring in other areas, which makes sense. AWS and advertising are the big money printers, the high gross margin parts of Amazon's businesses. You want to hire more people to optimize those things, but for other things, it probably doesn't make that much sense in different respects. So, I mean, overall, look at this. Ad revenue climbed 18%. Meanwhile, Facebook recorded its first ever drop in revenue. Like YouTube showed a dramatic deceleration to 4.8% from 84%. Again, 84% a year earlier. That was more so the COVID stuff, so I wouldn't read too much into that. But it's just kind of insane. Sales at Amazon Web Services jumped 19.74 billion. I have a startup right now. We pay Amazon Web Services a couple $100 a month. So, I mean, Amazon Web Services is doing well. They're getting a lot of money from a lot of different people. And they ultimately were able to prove that they can put up a good number. They were able to put up a new good quarter. So the final sort of piece of analysis I have here is, does this save the market, right? That is the ultimate question I think we have to talk about. I don't know. I think Amazon and Apple definitely don't stop the market, because they're a very big part of the indexes, very big part. Apple kind of theoretically is the market. And for Apple to be at 129, for Amazon to be at 120, 102, and then for them to spike up the way they have spiked up to be in the dominant position they are right now, it would take some momentum to drag them back down. It would take either a bad inflationary print, more of the market, like to go from 129 to 160, you're up $30. The market would really have to feel like you're not the cash cow that you are. They would have to dislook earnings from both of these companies to feel that we should still sell these companies and not hold that stock. And it's hard to do that when the earnings are this stat phenomenal that they've been putting up. So I think for some respects, they've saved the economy so far. I think, Google did its job, Microsoft did its job, Facebook didn't really do its job, but people are really trying to see what is Facebook going to be in the next couple of years. They didn't have horrible numbers, but we're going to see what ultimately happens. Roku definitely didn't do its job, and Intel didn't do its job. But in terms of the real big tap, Amazon, Apple, and Google, and Microsoft, they did their job. They were able to hold up the market, and they did not have like Snapchat or Target or Walmart or any type of those types of quarters. They were able to do the thing that they needed to do. So ultimately, we will see the CPI print, continuing inflationary pressures, and energy prices over the next month. I think those three are going to be the macro determinants to see if these prices continue to go up or these prices continue to go down, or if investors feel that this is a total dead cat bounce. Even though earnings are amazing, we need to see the S&P at 3,200. We need to have a real bad fall before we make our way back to the top. And that's going to determine everything. But when you put up earnings like this, when you put up 80 billion in 90 days, 112 billion, 120 billion in 90 days, it's really hard to just imagine that it's all fake. So we're going to see what happens. Let me know what you think about Apple and Amazon. Let me know if you own those stocks, those portfolio. Please leave them in the comments below. And thank you for listening and watching. I'll see you in the next one.